Yeah, so I did not really go through any like major ICT education. I've learned a lot, obviously, from different things, but this MMXM model, this basic market maker buy and sell model, is something I've heard a lot, and I've always been kind of curious about it. So one of our users kind of requested learning this, and so I put this documentation together for you guys, linked it in the chat. And so, yeah, it's going to be a lot of kind of education, and there is kind of a lot going on. So feel free at any point if there's a concepts that you need me to kind of go back over, clarify a little bit, or if there's anything along the way you're confused. We're going to be doing quite a bit of education with this session in addition to some backtesting. So feel free to reach out in the chat if you guys have any questions at any point. But in general, for today, I'm going to be using the 1 hour time frame and 5 minute time frame kind of in conjunction for this model. I'm going to be mainly looking at indices during New York session, but this market maker buy and sell model is really more of just like a kind of price construct more than a specific entry model. You will use specific entry models to actually trade it, but the model in itself is more of just like a kind of concept about how price often tends to kind of move. And generally you'll see this market maker buy model, and we have kind of this graphic here. You'll see an initial consolidation, and then as price is moving down, ICT used the words distribution, so kind of several legs down to the downside, typically kind of three kind of pulses is generally what he'll kind of show. So first stage distribution, second stage distribution, and obviously this is kind of on the sell side of the curve when price is generally trending to the downside. And then at some kind of key high time frame level, you will see what they call a smart money reversal, and I'll go into a little bit more on that in just a second. And then after that reversal takes place, there's kind of three legs to the upside that you could trade any of these three. The low risk buy is essentially, called that because you have a pretty good risk to reward. Assuming price is going to get back up here eventually. If you're buying down here, you're there's not a whole lot of risk that relative to the reward. So the risk to reward is really good for these low risk buys, but they're also generally probably a little lower win rate because it's harder to nail these as well. And then after price has kind of shifted market structure to the upside, you're essentially just looking for a trend continuation with this first stage accumulation and second stage accumulation, reaccumulation, obviously on the buy side of the curve. And we'll see in the charts, it doesn't always look exactly like this. You have to kind of get a little creative to identify these. And then on higher time frames, it's worth noting that often it will kind of just look like this. Just a high down to a level and then kind of back to the high. So it's on the lower time frames that you might be able to see this kind of detail. And that's why we're going to be using kind of the 1 hour time frame for our kind of points of interest, but the 5 minute time frame to actually get this level of detail for our entries. For the sell model, it's essentially just the vice versa. Instead of the accumulation being at the previous high, you've got a low in this case where there's the initial consolidation. There's accumulation phases to the upside where there's a smart money reversal, and then obviously you're looking for sells for kind of this reversal. So low risk sell, really good risk to reward, assuming it's going to come back to this initial consolidation, and then a couple opportunities to catch kind of trend continuation on the way there. So I'll talk a little bit more about this smart money reversal. So essentially there's a couple things going on here, and I'll try and get this so you can see both of these. I can grab this. All right, so for this smart money reversal, there's really kind of, I guess, a couple key components. Generally, you will see, I guess, kind of two forms of liquidity taken at these levels, both like some kind of high time frame level. Generally, you can kind of see if there's a higher time frame fair value gap or order block or something. You're taking some kind of higher time frame liquidity, but also on the lower time frames, you're going to be kind of sweeping the local liquidity either on the asset you're trading or one of its kind of correlated pairs. And that kind of brings me to this concept of SMT divergence. So you may see local liquidity swept either on the pair you're trading or its correlated pairs. And this concept of SMT divergence is really important to help identify these smart money reversals. And for those of you that haven't heard of this concept, it's essentially a deviation in price structure between highly correlated assets. So think indices, the ES and the Dow, the Nasdaq and the S&P, or the Dow as well. Crypto could be Bitcoin and Ethereum. Forex, the pound and the euro, metals, gold and silver. Essentially, two highly correlated assets that generally like to trade in tandem, when you see these deviations in price structure, in this instance, one of them makes a higher low and one of them makes a lower low. It's called SMT divergence. Sometimes people call it a crack in the correlation. But it's basically just a deviation in the price structure, and this is a potential indicator that price could be reversing to the other direction. So kind of all these things together are kind of how you can try to identify smart money reversals. You're at a key kind of liquidity level. You have SMT divergence potentially on like lower time frames. And then that kind of takes us to what we're going to be using for our actual like daily bias and high time frame. So there's a lot of ways to figure out daily bias. I personally, most of the models I trade, I don't use daily bias. So to just keep it simple for me and also for you guys, I'm just going to use the 1 hour 200 EMA. I think we used it on the last video as well, and it's good enough. So if we have clear kind of, if we're clearly above the EMA, then we'll be looking for longs, and if we're clearly below, if we're kind of chopping around it, then there's no clear bias, so we'll kind of just pass on that time. And then for simplicity, I'm also only going to be using internal liquidity. So when you think about price, maybe I can open up a chart real quick so I can show you guys a little bit more what I mean with this. So as you're kind of moving along, price is taking out external liquidity and internal liquidity, and I'll show you what I mean. So external liquidity in this case is essentially just like these kind of highs along the way of the trend, and internal liquidity is typically in the form of some form of fair value gap, order block, basically rebalancing kind of along the way. And so rather than trying to trade kind of both of these, I'm going to be focused on specifically these retraces to internal liquidity on the high time frames. And so we're looking for kind of continuation of the trend, and that's what we're going to be using for kind of our high time frame on the 1 hour time frame. And this could be a fair value gap, a balanced price range, or order block. So we'll kind of go over those real quick. Most of you guys should be familiar with fair value gaps. It's essentially kind of in a 3-candle structure. There's gaps essentially between the candle before and the candle after. So this price range where there was no overlapping wicks is called a fair value gap, and it can often act as kind of a support and resistance level. A balanced price range is 2 overlapping fair value gaps. So you can see coming down to the downside, we have a bearish fair value gap, and then when price went back up, there's a bullish fair value gap, and where these two overlap is called a balanced price range, which is stronger than just a fair value gap by itself. So we can look for those, and then you guys are pretty familiar with order blocks. I've gone over that quite a bit, but we'll also be looking for those if there aren't fair value gaps and order blocks. So talk a little bit about the entry models, and then we'll try and get to the charts. Definitely a little bit more education on this one, but I really want to thoroughly go through this all with you guys. So for our low risk buy and sell, ICT generally says to look for breakers, and the unicorn model is kind of the core model that he would recommend for the kind of low risk buy or sell. So as we saw it a couple weeks ago, if you guys need to review, I went over the unicorn model, but just a refresher, you're looking for price to kind of form a lower low, break to the upside, and you want to see both an overlapping breaker and fair value gap that you basically look to enter on the retrace into that and continue to the upside, and vice versa for sells. So we're just going to be using the retest of them, and maybe we'll just use it kind of depends on the risk reward. As you guys saw when I did the unicorn model, sometimes if you need to get a little tighter stop loss to get the 3R or whatever you want, you can kind of tighten it up to just underneath kind of where the overlapping fair value gap and order block is, but maybe we can just use the lows as well if it gives us good enough. But generally I was looking for kind of the first opposing liquidity level that gives you 3R, so we'll kind of stick to that as well. And then for the kind of continuation models for accumulation, the first stage and second stage, let's just go ahead and use the Doyle exchange supply and demand model. I backtested this with you guys a little bit over a week ago. So if you guys need to go back and review that video as well, you can. But essentially you're looking for demand levels for a move to the upside, which is essentially an order block. You can kind of see this red candle before an impulsive move to the upside, a wick into it, and then we're going to enter essentially as a new candle high is created, and using that kind of wick that wicked into the demand as our stop, and looking for fair value gap fill or kind of continuation to give us at least 3R. And then we're going to be using the same model For the second stage reaccumulation, the only difference is you're actually targeting that initial consolidation. So when you're doing this first stage accumulation, like these kind of highs along the way, or just the like local highs, those could be kind of your simple take profit levels. But when you're using this second stage reaccumulation, your main target is just initial consolidation. And just a quick comment on this, ICT said this is his favorite one of all three of these to trade because I guess the big boys want to kind of take this liquidity up here. They're all in these longs and they're looking to kind of get price back up here to continue moving the trade in their direction. So oftentimes this second stage reaccumulation can be pretty quick and impulsive, and that's kind of one of the reasons I think he likes it more than the others. So what else? I'm not going to trade if there's like red folder news. For today, I'm not going to do any trade management. We did a little bit of stop to break even last week. I'm not going to deal with that. We're just it's either going to be win or a loss. And as I kind of mentioned in the past, there's a ton of optimization considerations for the unicorn model entries or the Doyle exchange. You can use the wick highs or lows, or the other side of the fair value gap breaker. For the Doyle exchange, you could potentially enter on the order block fair value gap retracements instead of waiting for the reaction. Take profit considerations, etc. So there's a lot of different optimization considerations you can think about. So I do want to show, I'm going to be using these tags for the three different entry triggers. The entry trigger 1 will be these low risk buys or sells. The entry 2 will be first stage accumulations, and the second stage will be entry trigger 3. So in your account settings, in the journal setting, in the journal tab, you can come in here and add tags, and this just helps you filter the analytics later on by the different entry triggers. And maybe you find out that one of the trade triggers isn't really as good as the others, or it's just not really profitable. That helps give you more information. So I'm going to be using these 3 tags, and here's kind of how you do that within the account settings. And then let's pivot to the chart. So I'll kind of talk you through what I have on here. So I'm going to be looking at the 1 hour time frame for ES. So I have the 1 hour time frame for kind of my high time frame levels and kind of bias. I have the 5 minute time frame, which I'm actually going to be entering on, and then over here to the right, you can't really see it, but I've used this 4 screens technically. I have the NASDAQ and the Dow. So if we're looking for that SMT divergence, I might reference those every now and then. But just to kind of catch you up, we're starting this in just the start of 2023. Just kind of where I start. Sometimes I start these at the start of the year. So that's kind of why I decided to do this. And at the first week of the year, we were kind of chopping around this 200 EMA. Before we were clearly below it, and respecting fair value gaps, and short bias was pretty clear. But now the last couple of weeks, we've kind of been chopping around it. So probably be a good time to just not really trade until you have a clear directional bias, which we got here. Kind of that end of the first week of the year, we got a nice shift to the upside. We're above the 200 EMA, nice clear market structure shift, and so we're going to be looking for longs here. And so I have this first trade mapped out, and then going forward we'll kind of just see how things work. But as you can see on this kind of 1 hour time frame, it just looks like a high and a low, not a whole lot. But on the 5 minute time frame, you can see a lot more detail here, and I'll expand this too so I have a little more real estate. So on the 5 minute time frame, you can kind of see what we are looking for is the kind of this visual, I guess. And you can kind of see from what I've drawn, there's a consolidation up here. We have our first move down, initial redistribution, a second leg down, and then second redistribution down to these lows. And you can see here I've marked out this kind of 1 hour order block, this last red candle before this move to the upside, and that seems to be a kind of good high time frame level that we're starting to respect coming into New York Open on this Tuesday. So I have a note here that it looked like pre-market, the low risk buy actually already happened. So if we zoom in a little bit, you can kind of see here we have this breaker, this last green candle, before we had a move to the upside, also overlaps. We'll delete this just so it's a little clearer to see. And we have an overlapping fair value gap and price tags into them. So this would have been our unicorn model entry, but it was before New York opened. It was also right on news. So during, Powell's speeches often last like about an hour or so, so probably wouldn't really be interested in trading this at all for the first like, hour or so. But so we're not going to really have an opportunity to trade this one because it was during the open. And I guess, yeah, a couple other things. So indicators, I've got the 200 EMA here on the 1 hour time frame, but the only other thing that I have on this 5-minute time frame is just the New York sessions to kind of tell me, show me when those are. But nothing else. I'm just analyzing the chart and kind of drawing my own things as I see price develop. So again, coming into New York session with news right off the bat, I'm really not interested in any trades kind of early on. Usually about the first hour or so. I think his speeches generally last an hour, so I probably wouldn't be interested in anything until after this point. So coming in here, we're looking for now our first stage accumulation. So I'm eventually expecting price to come all the way back up here, and I'm just trying to catch some moves along the way. So for our first stage distribution, we're going to be looking at our first stage accumulation. Sorry, we're going to be looking for Doyle exchanges model, and we have this last red candle down here as our key kind of demand level. Not really anything else that I'm seeing here. We've already tapped into this potential demand level, and I'm not. This is not really good risk to reward or anything here. And again, it was kind of during Powell's speech, so it's better to just kind of wait for after that happens. And so I'm interested to see if we tag into this demand level, and we got a wick into it right here. You can zoom in a little bit so you guys can see. So we did just wicked into it, no closures into it, which is also a key component of Doyle's model. And for his entries, you typically will use the high of the candle that wicked in to demand for long in this case, and we're going to be targeting out this this local high that gives us at least 3R. We could potentially go for a lot more, but just for kind of catch the low-hanging fruit, we're just going to be going for a quick 3R. So I've got my levels here. I'm going to come up here and place the order. For this personally, I generally always use 1% of the initial balance. I talked about that a little bit in the risk management stream I did a couple weeks ago. But I also wanted to point out I'm using MES, the micros, and the reason for that is you have this new feature with V2 that you can actually restrict the position size instead of decimals. With futures, obviously you have to use whole contract amount. So using these micro contracts, MES, MNQ, you can actually get a little more clarity on how much size you're going to be using instead of having to use decimals with the mini contracts. So we'll use that, and then I'm going to put a tag on this for entry trigger 2 because this is referring to this first stage accumulation, and it's a buy stop for this for Doyle Exchange. So it's not going to enter me in until I get above this. I'll go ahead and save it, and I'm going to let these play out for a win or a loss, so I'm just going to play it out. And I actually did want to show you guys too, this is a new feature I didn't even know existed, but sorry, my camera's in the way. Let me see if I can see this. Okay, so in the open positions here, in this toggle down, you can go to the position closed. So if you don't want to, if you have a trade, a model that takes, a long time, or you're just impatient, you just want to see how the trade played out, you can just use this go to position closed, and it'll take you immediately to where the position closes. So that's kind of another cool feature that I just found out existed, and this trade would have tagged out break even, so it's a good thing that we didn't do that. So this is a first stage accumulation entry for this market maker model. We were able to catch a nice 3.08R, and we'll go to the next New York session because we're coming to the end of the day. And at any point, again, feel free to give a shout in chat if you have any questions or anything like that. One of the interesting things about this model is, this is true with a lot of different things, but obviously price is fractal, which means like these patterns can show up on multiple time frames. So as I'm coming into this next day for New York session, we can kind of see on this 1 hour time frame, we've gotten our low risk buy, our first stage accumulation, and we still haven't kind of come back to this consolidation. So I'm interested in potentially catching a second reaccumulation for another long to this upside. So let's get to kind of where New York Open is. I believe it's a couple more candles. One more. All right, so we're at New York Open. We're looking for Doyle Exchange's supply and demand model. We've got this kind of last red candle here, before. Sorry, let me make sure I drew that correctly. He uses the last red candle and also like the wick low. So we would use this kind of entire area. What else? We also have kind of one above it. There's kind of two really close here, so maybe I'll just use this last one. This this red candle here before. Technically, it has kind of already tapped into it, so I would maybe prefer to see this lower level, but I think either if we get a reaction to either of these, I think it could be valid. So let's see kind of how things play out. And again, I'm not really looking at these other charts unless we're doing a low risk buy, because I want to try and identify the SMT divergence. We'll try and find one of those in the future days, but trying to identify a tap into either of these levels. I want to see a wick, not a closure. All right, so we got a wick into it. It almost closed into it, but this first level here, we have seen a reaction, and we did sweep this local low, so that could show it's going to reverse to the upside. So with Doyle's supply and demand model, we'll do a buy stop above here with the stop loss at the low. And since this is our second reaccumulation, the take profit's actually going to be the high, the initial consolidation here, which gives us 3.3R. So that's the level we're going to use for this. And so when I place this order, the only thing I'm going to change is I'm going to do entry trigger 3 for this one. And it's going to be a buy stop as well. So let's see how this one plays out. So we are tagged in now, and let's see how it plays out. Great. So we've been able to catch two longs along this way by identifying this market maker buy model. We missed a low risk buy because it was pre-market this first day, but we were able to catch a first stage accumulation and second stage accumulation back to these highs. So being able to identify these, obviously you have to have the right bias and everything, but I think if you can see these market structures with the consolidation and kind of the three pulses down, and then it gives you more confidence that there's probably continuation to the upside. So let's go to the next day, New York session, and what do we have here? So I believe there was news, CPI, yeah. So price went pretty crazy this first day. There's not really a whole lot going on. I think this is actually, so looking back to the left, let's try and identify some kind of key levels to look back to. The first thing that catches my eye is this 1 hour order block. So I'll use this parallel channel. So I have this parallel channel here because you can also see the midpoints. So it's just over here on the left, parallel channel. That's what I'm using for these kind of high time frames, because often the midpoint of fair value gaps or order blocks also like kind of adds a little confluence. There weren't really any. There was a fair value gap up here, but the CPI kind of just blew right through that. So I think this order block is probably a better level for us to look for. If we looked lower, there was a fair value gap back here, kind of along the way up, but that's already been tapped into. So I think this order block is really kind of our first high time frame level that we want to look for. And so we want to try and unsee a similar structure to identify where we could potentially look for this. And I believe this is a case where since the 5 minute, or I guess the price action was so volatile with CPI, like both the 1 hour time frame and 5 minute are pretty kind of like up and down. There's not really a whole lot of detail going on. And this is another example of how kind of price is fractal. And I'll show you guys on the 1 minute time frame that we kind of have our consolidation up here. So kind of this cluster of candles up here. And you can use this path. Where is it? Yeah, I actually have it saved right here. Path indicator, it's right here. Or path drawing tool to kind of show, okay, we got to move down for our low risk buy. We have another pulse down for the first stage distribution, and potentially we're looking for maybe one more leg up before kind of that final distribution. So let's see if we get that. And then now we're going to be also looking for SMT divergence. So I'm going to show you guys here kind of what I look for that specifically. And I've got this 1 hour time frame kind of as another reference, but if you guys are just looking at 1 or 2 or 3 charts for SMT divergence, one of the nice things, if I show right here within these I gotta move this thing out of the way, within the layout, you can actually sync a lot of these intervals, time frames, and everything. So as you're kind of scrolling through one of the charts, it'll scroll all of them at the same time. So that's kind of another pro tip, I guess, if you're looking for SMT divergence or comparing pairs with these multi time frames. You can kind of leverage these different syncs to line things up. But since I'm actually, let's go ahead and sync the time. I don't want to sync the interval because I got a 1 hour and 1 minute on these, and I don't want to sync the symbol obviously, but I'll sync the time and the date range so that hopefully these will scroll at the same time. And I'm gonna get them expanded a little bit so I can kind of see all of these together. I don't really care about the 1 hour right now. So I've got MES on the left, MNQ on the right, on the middle, and the Dow on the right, all on, I believe, 1 minute time frame. So they're all on the same time frame. I'm just gonna try and show you guys here. Let's go 1 minute at a time. Kind of what I'm looking for with the SMT divergence. So we did get our kind of, it wasn't really a wasn't really a move back, but yeah, so maybe only kind of, I guess technically you could say this is a slight pullback, but not relevant. So maybe we get one more low. But I have noticed right here, this is the SMT divergence that I was referring to. So it's hard to see on this. This is like a 1 minute time frame. But if you look here closely, you can kind of see the crosshairs for comparison. Both NQ or MNQ and MES made slightly lower lows. So I'll kind of mark this with the trend lines. So both of these made slightly lower lows, whereas YM made a slightly higher high. So this is the SMT divergence that is talked about, and this can be a kind of support that price is going to go to the upside. I'm not going to record this trade because it's on the 1 minute time frame, and we're only looking for trades on the 5 minute. But this is just to show you, for example, that this same kind of model can play out on multiple time frames. So if we were to now look for a trade with this, we have, let's kind of mark out our potential unicorn model. We have this, I guess, yeah, we have this breaker here from this last green candle before we got to shift to the upside. We have do we have an overlapping fair value gap yet? Let's see. We have an overlapping fair value gap from this 1 minute candle. So you could potentially look for a long here on a retest of this overlapping fair value gap and order block, and try and target out maybe this local high over here. I'm not going to record this for today because we're doing things, but I just want to show you guys, for example, that this model is fractal and you could potentially trade it on multiple time frames. If you are a lower time frame trader, you could trade this on the maybe 1 minute and you can use 15 minute for your high time frame levels, or vice versa. But it just helps if you're not really seeing anything on the 5 minute time frames, then this can be helpful. So I just wanted to kind of show you guys that, but we'll switch back to the 5 minute time frame, and I'm honestly just going to skip this day because according to our let me go put things over here. So now we got our 1 hour and 5 minute again. Since there wasn't like this clear structure wasn't visible on the 5 minute, I just wouldn't take any trades if I was sticking to this kind of mechanical model. Obviously, we saw you could potentially use it with 1 minute, but I wouldn't really classify this as like meeting this criteria just because it was kind of too fast up and down. So we'll go ahead and just pass on that today and just go to the next day. Go to next session. All right. So trying to identify high time frame levels. We still have this order block that is being respected. If we go lower before we form like SMT divergence in here, then we could potentially look for maybe this order block down here. So maybe I'll mark that out on the chart just as another potential level. If we go any lower, we'd still be above the moving average. So I think that would be fine as well. But since we're still kind of in this order block, let's drag this over to the left and see now, can we find any sort of SMT divergence now that we're into this level, and look for a low resistance buy. So let me get these pulled over and see if we can find some SMT divergence. So we've got some news at 10 New York time, so we've got like a little bit of time to look for an entry, but coming into New York session, let me make sure I get to the start of New York, which is like a couple candles. All right, so now we're at the start of New York Open. We're on the 5-minute time frame with all these. All right, so looking for SMT divergence. Let's see what we have. So ES here, we have a higher low, and NQ in this case, we have a lower low. So as you can see from these two trend lines, let me zoom in a little bit so you can see better. Higher low on ES, lower low on NQ, that's our SMT divergence. So we have valid entry for long here. If we're sticking to the unicorn model specifically, I think we have to take the trade on NQ, because the unicorn model, you kind of have to make a lower low and then kind of reverse to the upside. So we're going to be taking this trade actually on NQ, because ES made a higher low. But let's see if we get the kind of valid entry parameters for our long. So we've got, let's see, last green candle here. This is our breaker. And do we have an overlapping fair value gap? We do. So I'll put this here. 5-minute time frame. It's pretty small, but we do have an overlapping fair value gap and breaker. So I'm going to look to enter on a retest of this order block, and I'll just use the low here to just be conservative. Again, this is something you can optimize. Do you use the body? Do you use just the underside of this, the kind of overlapping fair value gap order block? And then we want to target out at least like 3R. So let's see. Our initial, and then let me map this out for you guys too, just so we kind of go through the whole exercise. So in this case, we have our initial consolidation up here. I would kind of say maybe this whole cluster. Kind of initial, maybe just this kind of up second little initial consolidation, and then looking for our, we have our kind of low risk buy here, a retrace up here. Then we have our first stage distribution, our retrace, and our second stage distribution down to these lows. So it doesn't look exactly like the market maker model, but we can see the clear, consolidation and kind of 3 impulses down. We have our SMT divergence at a key level on ES, and so everything is valid for this. I guess the only thing is if we aren't able to enter before the news, then I probably would just wouldn't take this trade. So let's go ahead and target out this high here. It's relative equal highs kind of along the way, and we'll see how this one would have played out. So I'll place the order here. Let me expand my chart again. So place the order. Sorry, I gotta make sure it's selected. All right, 1% of initial balance. Again, I'm on MNQ, so I can use 14 contracts in this case instead of like 1.4 NQ contracts. I'm going to be using the first tag for unicorn model, low risk buy in this case. This is going to be a buy limit. We'll save it, and let's see how this one played out. So we got tagged in pretty much immediately before the news, so I think this would be a valid trade, and then let's just let it play out. All right, so this one did come during news, but consumer index, a lot of times at like 10 a.m. Eastern, the news that you'll see at that specific time isn't the most impactful. It's not as impactful as CPI, non-farm payrolls, Powell speaking or something. So a lot of times that is one that you can kind of hold trades through if you're already in, or if a trade gets triggered in, you can take those. That's something I've kind of noticed over the years. But yeah, really nice 3R win. Taking our low risk buy, just to review, we were into this high time frame order block. We had SMT divergence between ES and NQ. We took the unicorn on NQ because it formed a lower low and then shifted to the upside. So that worked out for us. I guess a quick note, if you would have done a really tight stop just on the other side, you would have got stopped out. So our conservative stop loss was better in this case. And yeah, it trended up pretty nicely to our first level. So we're at only 1105. So let me see if we can catch a first stage accumulation for a potential second trade the same session. So I'm focused predominantly on ES. I really only traded NQ because it was the proper unicorn model, but I would prefer to be focused on ES just based on the other two triggers. So just so I don't have to look at so many different charts. So looking for Doyle exchanges buy model here, we have this demand level right here. that could work out, and then there's also one below it, this last red candle. So either of these, I'm looking for a potential wick into these, and then continuation to the upside. So let's see kind of how these play out, if we get tagged into any of them. So I think literally like to the tick, we tagged into this one. I would probably count this. Maybe would have preferred if it went a little further, but it technically did tag it. So we'll go ahead and count this as a valid wick into it with a buy stop above. And what we need to target a high that gives us at least 3R. So maybe this high over here gives us 3.04. So I'm going to be using a buy stop if we get a high above this kind of previous candle that wicked into the demand. I'll come here, place the order, 1% of my initial balance. I'm going to use the entry trigger 2 tag for this one, and it's going to be a buy stop. So we'll save this, and let's see if we get tagged in. We get tagged in pretty much immediately, so let's just fast forward. And great, another win. So really nice kind of, I guess, 2-win day with the model. We caught both the low risk buy as well as the first stage accumulation. Potentially a lot of different ways you could have traded this. I mean, there was, I guess there weren't really any fair value gaps on this specific time frame. I'm not sure if the 1 hour had anything. If we see here, yeah, there is a balanced price range now on the 1 hour, so maybe we'll come back to that in the future. Kind of these two fair value gaps are overlapping now. But yeah, this is more of a low time frame level that caused this move up. There wasn't really necessarily a high time frame level. If anything, we could have rejected off this bearish fair value gap, but we're in a market maker buy model, so that's how it worked out. So let's go to the next day, and let me know if there's any questions in chat. I know this model can be complicated, but I want to make sure and kind of go over everything with you guys. So let's see. So we did finally take this initial consolidation up here. So that move is kind of, I guess, complete. I'm not really looking for any additional kind of final legs. Maybe there was a trade if you... No, it would have taken it before it kind of came down here. So potentially this kind of last little wick into this, there was a little fair value gap right here. You could have potentially considered this your second stage distribution for another long, but it wouldn't have been Doyle Exchange's model, so I don't think we would have caught that even if we were looking for it. So now let's see what high time frame levels we have to work with coming into this next New York session. I'd mentioned before we have this balanced price range. So this fair value gap down here basically overlaps with the other one. So you can see here we have a bearish fair value gap, a bullish fair value gap, and the area that they overlap with each other is called a balanced price range. So that's definitely going to be a key level that we can potentially watch for. We also have this order block. So this last red candle here, sorry, let me draw that a little better. Last red candle here before move to the upside. We've already bounced off this once, so again, this could kind of be similar to this one where it kind of continues to play out before the move to the upside. But those are really the kind of two key levels that I would consider for this specific day. So let's see if we get our market maker model. Let's see, we have initial consolidation up here, probably kind of this area right here. Let's see if we have our three pulses to the downside yet. So we have our maybe low risk buy, a break in market structure by a kind of a retest of this. So maybe that's our first. These retraces aren't really substantial. So potentially this is one that would have played out like during London session a little bit before. But it looks like this kind of move down has already, like, we definitely missed the low risk buy potentially. I see a question in chat real quick. So Robert asked if I'm trading a Forex pair Euro USD, which other pairs can I compare to get the SMT divergence? So generally what I will see people use is the pound to GBP USD is kind of the best one, and then you could use an inverted DXY as well, so the dollar. I don't know if there's some shortcut to invert the chart because obviously the dollar is inversely correlated, So if you're trading that one, you can Google real quick what the shortcut is to invert the chart. But I think GBP USD and the inverted dollar are going to be the best ones to compare for SMT divergence for Forex pairs, for those Forex pairs. So let's go to New York session. We've got a couple more candles here. All right, so we're at New York open. Let me see real quick if we had SMT divergence at these lows, because that would maybe confirm that this smart money buy has taken place. So we've got lower lows on NQ and YM. What about or NQ and ES? What about YM? So at these lows, yep, we have a lower low on NQ and ES, but a higher low here on barely. It's pretty much an equal low. So yeah, I would classify this as SMT. You can kind of see here higher low. So I would say we are in the direction, kind of coming back to this consolidation. So let's look for a first stage or second stage long here. I would already say to the so the low risk buy was here. We had our, I'll kind of just map this out for you guys. You guys can see exactly what I would have been looking for if I was trading. So we have our breaker here, and we have an overlapping fair value gap. So unicorn model long would have been right here. Again, this is, I think, late London session, so just not a trade we would have been able to catch. Probably would have been targeting these highs, so I would have tagged this just a little bit ago. You could potentially argue that this low here was also a first stage accumulation because it traded back into this demand level that you've got right here. So potentially, I think we're really only looking for our second stage accumulation at this point. So let me see. I have one more question in chat. So how about XAU USD? That one I would compare it to silver. I actually don't know what the pair. I use futures, so it's a GC and SI, I think, for futures. But whatever CFD pair is for silver, that's going to be your kind of main one. And then similar to Forex, you could use the inverted dollar as well if you want 3 pairs. But gold and silver are kind of the obviously 2 most correlated metals that you can use for that. So let's look for a second stage distribution here. Don't really need the 1 hour time frame, but let's see if we have any. So we've got a demand level here from this kind of last red candle before it moved to the upside. We also have one down here. I would say this one's probably a little bit better. So this last red candle before kind of impulse and move to the upside. So let's see if we get a wick into either of these for a potential long with Doyle Exchange's supply and demand model. If not, I'm not worried about it. Yeah, like if price comes all the way back up here, then obviously there's just no trade today, but let's see what we get. So play it forward. There's not really any additional demand levels I would want to use. We're kind of just grab walking up. Nothing really impulsive. So let's see. I might need to drag these over a little bit. All right. So we closed into this first level, so I'm not really interested in this one. I'm just going to go ahead and delete it right off the bat. What about the second one? Let's see if we get a wick into that one. Not quite yet. Might have just got front run. So yeah, we're already past New York session. We got really close to wicking into this, but unfortunately just slightly front run. I think if you used maybe both of these red candles, you probably could have caught it, but Doyle generally always just uses the last red candle, so sticking to his model, I just don't think we would have caught any trades today. Like again, the low risk buy and first stage accumulation were probably pre-market in this case, so just no trade that we would have caught during New York session. Sorry, I meant to go to next New York session. Let's do a couple more examples before we wrap up. So let's kind of come back to where we are in the 1 hour time frame. So still respecting this level on the 1 hour time frame. You could potentially say that this whole move is kind of a first stage accumulation until we make a higher high here. So still potentially interested in a long. We haven't taken out this consolidation up here yet, so still open to this low. If we had a lower low below here, then we'd have to kind of look for that low risk buy again with SMT divergence, but I think we still have this kind of new uptrend intact. So I'm going to be looking for I guess kind of a first stage accumulation long relative to the 1 hour time frame. So marking out, let's go to New York session, a couple more candles. All right, so now we're at New York open. Drag this consolidation high over a little bit more so we have it visible. Where are our demand levels? So this last red candle is one demand level, and this one right here that we're starting to make could potentially be another if we come a little higher. So we haven't really, impulsively moved away. So this is probably wouldn't count this. I'll focus on this one down here, and then we also have one just a bit lower as well. This red candle here before the impulsive first move up. So either one of these, I could look for a kind of wick into for a potential long. We did already just take out this high, so it's kind of the reaction. A lot of people took profits here at this previous kind of New York high, but let's see if we can catch a long with either of these. So we got a wick into this, but unfortunately the candle high was like way up here. So this is not even a trade I could take. I think the risk to reward would be like 0.5 for this one. So I can't really use this candle. So I want to see if we get maybe another candle that wicks in that I could use instead. That one's a little bit better risk to reward, but I still don't think it's enough for what I would want. It's not even 1-to-1. So potentially a trade you could take here, but I would probably pass on it just because it's only 1-to-1. And if I'm going to take the risk, I want to make sure that if it's a win, it's going to be a bigger win. So personally, I would pass on this. Maybe if you were trading a lower time frame, I'm sure 1 minute time frame in here. You did actually technically get a closure, but you could have potentially used this kind of lower time frame candle and gotten, what would this have been? This would have been a 3R if you used the 1 minute time frame. So 5 minute time frame, not really something we could have used, but that's fine. Like we don't need to catch every move. We just need to look for high probability ones and enter into those. So let's go to the next day. Let's do one more and then we'll kind of take a look at analytics. I don't think we've got a loss yet, so I promise you this strategy does have losses. I just maybe picked a time where it's a very clear uptrend and dips are for buying and longs are just higher probability. But I think properly identifying these market structures definitely helps as well. So we've already taken this high. So again, kind of move is already completed. Maybe overnight in the Asia session, you had potentially another lower time frame market model with this order block still being respected. But now that we have kind of already taken it out, I'm going to be looking for kind of a fresh level to look for long. So I've got this order block here that I'm seeing this last red candle before I move to the upside. We also have a 1 hour fair value gap. So either of these levels could be, we might have already tapped into this. Did we tap into this fair value gap? 4008? Not really. We basically kind of tagged it, exactly on it, but I haven't really dug into it yet. So I would still say if we get our market maker buy model with potential SMT divergence in either of these zones, I'd be open to it. So let's play it forward. We may not even get it this day because we do need obviously to see the price developments before looking at it. So yeah, pretty much straight down. This again may be a day where on the 1 minute time frame you can see clearer kind of moves down, but this is pretty much straight down on the 5 minute time frame and 1 hour. Big red candle. So really not, I would say this does not fit kind of our market maker model on the time frame that we're using. So I probably wouldn't even be interested in this specifically for this day. We'll see how it plays out. So we continue to move lower, and I think this is an important thing. So low time frames can give you more information, but they often also have lower probabilities. So we potentially could have seen the same market maker model in 1 minute in this case, but without the higher time frame kept us out of this trade, and it saved us from potential loss because it just went through both of these levels. So I'm gonna see. There's still really no clear. This is literally pretty much straight down. I think there's maybe one slight retrace here, but I would say we're kind of we're coming back to this balanced price range. So guess where we bounce? This balanced price range. So this potentially could be the level that we could look for. I'm still a little cautious with this on a 5 minute time frame. I mean, let's see if we can mark out. We've got maybe initial consolidation here. You have kind of a first move down. Maybe this is your low risk buy. We have at least a pull. There's a small pullback here with these wicks. Sorry, let me draw this a little clearer and zoom in a little bit so you can see better too. So we have the first move down, low risk buy. You have a kind of pretty small retracement here between these wicks, but it was kind of in response to this fair value gap we had before. Then we moved down into the order block that I'd marked out, and finally we have kind of our third stage distribution. So now that we're at this balanced price range and we're starting to get a balance, let's take a look and see if we get any SMT divergence for a potential low risk buy. If not, it's not a big deal, but let's at least take a look, since we are in a high probability area for a reversal with this balanced price ranges are pretty reactive usually. So I would say of the three fair value gaps, order blocks, and balanced price ranges, the BPRs are probably the best ones to use because it's kind of the strongest level of the three. But all three of them can be valid for sure. I mean, they all cause short-term reactions at least. So we've got, let's see, ES here. They've pretty much all made their most extreme lows on this 5-minute candle, so I want to kind of go for one candle at a time and see. Let me zoom so you can see a little better. See if one of them makes a lower low, which we just got on YM. So right here you can see ES and NQ have made higher lows here. I'll mark NQ as well so you can see. And YM has made a lower low right here. So we have our SMT divergence, and I guess technically we would need to take the trade on YM because that's the unicorn model, but let's see if we get market structure shifts. So now we've got no more SMT divergence. So the important thing with SMT divergence is it's only like potential SMT divergence until you have like a market structure shift. Like we had a SMT divergence here, but there was never any kind of higher high created on any of these, and then all of them made lower lows here. So it's, if you are just trading SMT divergence alone, it's going to be decently low probability most of the time, and so you have to kind of bring in another factor. In our case, the unicorn model, you're looking for a market structure shift and then a retrace, and that's going to be higher probability, kind of adding another factor to it. But now we have lower lows on all of them. We've got a little bit of time left to see if we can get SMT divergence now. Lower lows on all of them again. It's just kind of a trending day to the downside. So, and we're pretty far below this BPR now as well. So I think it was valid to watch for this SMT divergence, and if we got kind of our valid unicorn model setup, we could have potentially taken this, but now we have kind of flipped underneath this. Let me go to my, 5-minute time frame. Let's look at our 1 hour. It's pretty much straight down at this point in time, and we've just blown through kind of all of these levels. Still have stuff down here, but now we've flipped below this moving average as well. So it's just lower probability, and we're not properly reacting to these levels. The 5-minute time frame, it was maybe a stretch to kind of draw out. It was pretty much more just straight down. But we've got, probably just no valid trade this day, and potentially going forward, maybe starting to look for shorts if you see a pretty big move down, and then you're looking for 1 hour kind of levels to look into going forward. So coming up on an hour, let's go ahead and just dive into the analytics again. This is going to look super skewed because I don't think we took a single loss. I think this kind of idea is powerful, but I definitely will tell you there is no 100% win rate strategy. I don't really know what this would be. You'd have to backtest to find out over time, but just to kind of show you some cool things you can do with this, since we have the different tags, you can kind of come in here and filter the analytics by the different tags. So as you can kind of see over there, there's only one trade. So not the most useful in this case, but I think we had maybe 2 on the entry trigger 2. So as you get more data, you can filter the analytics on all kinds of different tags, and kind of see, are certain trade triggers even worth using, or maybe not, and maybe you just want to stick to the higher probability ones. You can remove the filters by just Xing out on them. Average trade is 3.15R, and Yeah, we were obviously pretty much only in longs, and again, I think this specific time that I was trading was high probability for longs, so that's why we've seen the high win rates. But yeah, I hope you guys got some good value out of this. It is definitely a kind of a pretty, I would say, advanced in the sense that there's a lot of things going on versus some of the other models. You're really just looking for a certain price structure at a specific time. This is kind of a lot going on where you're looking at higher time frames, lower time frames, potentially multiple charts. So if this was a lot, then don't feel bad. Like, it took me a lot of time to even just understand what this was. And if anything, this could potentially just be additional confluence if you're looking for trades to kind of check the higher time frame and see, like, does this also show a market maker buy model? If it's also another trade I was taking, or maybe I want to start looking at SMT divergence. If I have a reversal model, maybe that's another factor that I want to start looking for to make my reversal model win rate go up some. So hopefully you guys got some good value from this. Feel free to reach out in the Discord if you have any other questions. And as always, if there's other models you guys want us to backtest, we've got the forum in the events channel. Feel free to let me know either in the forum or just message on Discord. Let me know. I love looking at these models, and hope you guys learned a lot from the session today. So we'll wrap it up there. But thanks for joining, guys, and I'll catch you later.